disappointing performance today, but no surprises. I mean, we did have a fairly disappointing result come out. Certainly that financial sector was in focus today, so OzForex was closed down around 19% after reporting that net profit down around 7%. But really that was a result of those significant costs that came through in terms of their listing last year in October, as well as that attempted takeover of the UK-based firm FX. So really, if we take out some of those costs, their pro forma net profit was in fact up around 33%, which was about 8% higher than the company was forecasting. So if we drill a little bit further into those numbers, it probably doesn't look as bad as expected. But overall, we do think the industry is fairly fragmented, and there potentially is a bit of merger and acquisition in this area, and the company has indicated that acquisitions are part of their growth strategy. So potentially we do see a bit of upside in the stock.
And Leanne, at the other end of the performance spectrum today, we had ALS, second best performer on our market, up just shy of 9%.
It certainly was, and ALS did report today. They in fact reported net profits down 28% to $172 million. That was fairly in line with what they were expecting. We were forecasting it to come in at around $161 million, so it was a little better than our expectations. Their revenue was up slightly by about 3.3%, but their final dividend was in fact down around 7 cents to 20 cents. So it was a little bit of a disappointing result. However, we do know that ALS has been trading in very difficult economic conditions, and I think that they have probably performed a little better than some of their peers. So I think that's why we have seen the market react positively today, and the stock has been trading higher. But having a look at the outlook, we do remain fairly cautious on the stock. There are a couple of positives. Firstly, we know they are going to be focused on reducing costs, but secondly, we do expect their energy division to continue delivering growth in financial year 15, and as well that industrials division does have a strong pipeline of projects. So there are a couple of positives there, but we also do foresee some risks. Firstly, any reductions in exploration capital expenditure could have a material impact on their earnings, given the size of their minerals testing business. Not only that though, currency risks. So about 55% of group earnings in fact does come from offshore. So any movements in that Australian dollar could be a risk to the company. And thirdly, competition. So competition from second tier companies coming in and competing on price could be a significant risk as well. So as a result of probably some of those risks outweighing those positives, we do remain fairly cautious on the outlook. It is down around 40% since its peak in April 2012. So operating off fairly low levels at the moment, but are remaining cautious on the outlook.
Yeah, Jeremy.